Rackspace just went up over 200%, and Wall Street may still be underestimating what's happening. Because this isn't just another AI hype stock. This might be one of the most fascinating turnaround stories in the market. Let's break it down. For years, Rackspace was left for dead. Revenue stalled. Losses piled up. Investors moved on. Most people assumed the company was slowly disappearing. But while everyone stopped paying attention, management was quietly rebuilding the business. And now we're seeing the results. In the first quarter of 2026, Rackspace generated $678 million in revenue. But revenue wasn't the big story. Profitability was. After years of losses, Rackspace finally made money again, and investors immediately noticed. The stock exploded. But then everything changed. Rackspace announced a strategic partnership with AMD. And suddenly Wall Street realized this might not be just another cloud company. This could be an AI infrastructure story. And AI stories tend to get expensive. But let me ask you something. Would you rather compete directly with Amazon and Microsoft, or find a niche where the giants aren't focused? Because that's exactly what Rackspace is doing. AWS and Azure provide the tools. Rackspace wants to provide the entire solution: infrastructure, security, operations, compliance, human oversight, everything bundled together. Think of AWS as selling ingredients. Rackspace wants to become the chef. And that matters because enterprise AI spending is exploding. Companies are moving from AI experiments to AI deployment, and many businesses don't want to manage all the complexity themselves, which creates an opportunity. Earlier this year, Rackspace also partnered with Palantir. By the end of 2026, the company expects to have over 250 Palantir-trained engineers, up from just 30. That tells me management is thinking long-term. But here's another question. How many turnaround stories actually survive? Not many. That's why they're so difficult. But when they work, the rewards can be enormous. And investors have certainly noticed. The stock is up over 260% in the last year. Short sellers got trapped. Nearly a quarter of the float was sold short, and the squeeze only accelerated the rally. But here's what fascinates me most: the chart. Because after a move like this, most stocks completely collapse. They give back all the gains. Yet Rackspace didn't. Instead, it started building a base. Higher lows, holding above $4, repeatedly attacking resistance around $6. And that's exactly what momentum traders want to see. Breakout, consolidation, breakout again. Which brings me to another question. Do you think the first move makes the money, or the second move? Because history says the second move is often where fortunes are made. The battlefield right now is simple: $6. If buyers can reclaim and decisively break above $6 to $6.10 with expanding volume, the next leg higher could happen very quickly. My target? $10. Now, before everyone starts screaming, next NVIDIA, there are risks. The AMD agreement isn't guaranteed revenue. Execution still matters. Competition still exists. And turnarounds don't always succeed. But Rackspace isn't trying to become NVIDIA. It's trying to become the operating system for enterprise AI. And if management executes, this could become one of the great turnaround stories of the AI era. But here's my question for you. Would you have bought a stock that everyone had already written off? Or would you have ignored it like most investors? Hit the like button if you love finding hidden opportunities, and follow the channel because we're constantly looking for the next big winners.